Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate jungle and spill the tea on what is really going on behind those official documents. Today, we're diving into a report that sounds like it is about to drop some serious cash news. So, what have we got here? It is a Form 8K filing, which is basically a company's way of telling the US Securities and Exchange Commission, or the SEC, all about some pretty important happenings that aren't on a regular reporting schedule. Think of it as a news alert for investors. And this one is from Antares Private Credit Fund. Now, the big news here is about a massive financial agreement they've just entered into. This document tells us that on the 11th of December 2025, Antares Private Credit Fund, or the fund as they call it, hooked up with Sumitomo Mitsui Banking Corporation, along with a bunch of other lenders, to get themselves a shiny new credit facility. This isn't just any loan though. It is a senior secured credit facility. That means it is a top priority loan and it is secured by a lot of the fund's assets. Basically, if something goes wrong, these lenders get paid back first. Now, let's talk money. The fund can borrow in US dollars or other currencies, which is pretty common for international companies. What is interesting is how the interest rates are set. For loans in US dollars, the interest rate will be based on something called an alternate base rate, or term SOFR, which is a different kind of benchmark rate. The specific rate depends on a few things, including the fund's own choices and what they have to pledge as collateral, which they call a borrowing base certificate. For loans in other currencies, they'll use rates that are standard for those local markets. They're also paying a fee of 0.325% on any money they haven't borrowed yet, which is essentially a fee for keeping that money available. Here's where it gets really significant. The initial amount of this credit facility is a whopping $500 million. But wait, there is more. This facility has an accordion provision, which is like a special clause that allows them to potentially increase the total amount they can borrow all the way up to $875 million. That is a huge amount of money. And the ability to expand it suggests they have big plans or need a lot of flexibility for future investments or needs. Who is backing this big loan? Well, certain subsidiaries of the fund are guaranteeing it. This means if the fund can't pay, these subsidiaries have to step in. They'll also guarantee any new domestic subsidiaries the fund might create or acquire down the line. So there is a clear structure of accountability here. And what are they going to use all this borrowed money for? Pretty much anything they need, including paying off existing debts, giving money back to their investors, making new investments, and other uses that are all spelled out in the agreement. Remember how I said it is a secured credit facility? This is why the loan is secured by a first priority claim on pretty much all the investment assets held by the fund and its guarantors. This is a strong signal of how important this facility is to their operations and how much the lenders trust the value of the fund's investments. There is also a specific limit of $50 million for swingline loans, which are typically very short-term loans to cover immediate cash needs. So, when does this all end? The period where they can actually draw down funds under this facility runs until the 11th of December 2029. That is the commitment termination date. After that date, the actual repayment of the loan begins. The entire facility needs to be paid back by the 11th of December 2030, which is the maturity date. It is important to note that between the termination date and the maturity date, they'll be required to make mandatory prepayments if they sell certain assets, have other positive financial events, or manage to raise more money through equity or debt. Like any big loan agreement, this one comes with rules. They call them covenants. There are affirmative covenants, which are things the fund must do, like keeping a minimum amount of shareholder equity and maintaining a certain ratio of assets to cover their obligations. Then there are negative covenants, which are things they cannot do, such as taking on too much new debt or allowing others to place claims on their assets. There are also standard events of default that would trigger serious consequences, which is typical for loans like this. This whole deal sounds financially pretty significant for Antares Private Credit Fund. The fact that they're securing up to $875 million with a strong collateral backing suggests they're either preparing for substantial growth, looking to refinance existing debt, or perhaps both. The interest rates, while detailed, seem to be in line with market conditions for this type of facility. Especially for private credit, the core purpose seems to be providing ample liquidity for their investment strategies and operational needs. This is a tool to fuel their business, and the eagerness of lenders like Sumitomo Mitsui Banking Corporation to provide such a large sum secured by the fund's portfolio indicates a level of confidence in Antares' ability to manage its investments and generate returns. Now, looking at this filing primarily as a Form 8, its focus is on the new material agreement. The most interesting financial implications come from the sheer size of this credit facility. A $500 million initial amount with the potential to reach $875 million. is a massive sum for a private credit fund. This isn't about reporting past performance in the way a 10Q or 10K would, but rather signaling future financial capacity and strategy. The strength of this facility lies in its secured nature and the flexibility it offers. The primary risk, as with any large debt, is the ability to service that debt and repay it when it matures, especially given the mandatory prepayments tied to asset sales and other events. In conclusion, Antares Private Credit Fund has just secured a very substantial line of credit. This is a strong indicator of their forward-looking strategy, likely focused on expanding their investment portfolio or supporting existing operations with significant capital. The key takeaway is the scale of financing and the confidence it implies from major financial institutions. For investors or partners, this means the fund has the firepower to execute its plans. The main risk is always the execution of those plans and the ability to manage the debt responsibly. Alright, that is our breakdown of this important filing. What is your take on this massive credit facility and what it might mean for Antares Private Credit Fund's future? Drop your thoughts in the comments below. If you found this deep dive valuable, please hit that like button, it really helps us out. And make sure to subscribe for more insights into the corporate world. And hey, don't forget to check out our Discord community linked in the description for even more discussions. Thanks for watching, and we'll see you in the next one.